Hi there, good afternoon. You're watching Closing Trades on ET now with me, Sneha. With me as always is Shrishti Sharma. And Shrishti, not bad of a day coming in, not much to complain about. We are still not very close to the 25,000 mark. Or, you could say we are close, but we're not being able to hold on to that at all. So we've inched so close to the 25,000 mark at certain points of the day, but we've not touched that. And maybe that is something that the market is waiting for another hour of trade left. Let's see if we're able to do that. Other than that, still a 105-point uptick coming in on the Nifty today, almost 0.4%, slightly off the day's high, but nothing much to worry about. Similar moves coming in for sensex, 0.4% uptick coming in. It's actually Nifty Bank that is absolutely flat today. No show of strength coming in from the banking space, and very flat, and mild hint of a positive bias coming in on Nifty Bank. You have India Wix that's up 2.25%. It's names like Infosys, TCS, HCL Tech, Wipro, Tech Mahindra. These are your top Nifty gainers, and all of them from the IT pack. Nifty IT is soaring as an index today, and it is up around 3% as we speak, 2.5%, slightly lower from the day's high for Nifty IT as well. But following that, you have Realty, Metal, Pharma, Auto, Energy, and Bank very nominally in the green. The stock that continues to be under pressure today is Nazara Tech, another 6% cut coming in as that gaming bill has now become a law, the online gaming bill. So that's the reason why Nazara Tech also continues to be in pressure. But from the losing end, no major cuts coming in. The max stock is losing is Apollo Hospitals, 0.8% lower from the Nifty pack, followed by Nestle, Asian Paints, BEL. So this is largely what's happening in the Nifty 50 group of stocks. Just want to see what the broader market is up to, because around midday mark today, the small cap index was rather lackluster. You have mid cap that's up 0.3%, and Nifty small cap absolutely flat. In fact, the Nifty Bank and Nifty small cap are trading with similar gains today. Other than that, Shrishti, any stocks that are highlighted by you today? Because lots of stocks are standing out. It's been largely a stock specific action sort of a day for us.
Well, yes, Snehi, like you have been mentioned, then nothing much to complain about right now in the markets. But yes, a very good comeback is what we are seeing in the IT pack. But add to that list is select pharma counters as well, because yes, the overhang with respect to tariff does remains, but a lot of these large cap pharma counters, they are also seen to be making a bit of a comeback. The autos continue to be in the top gear, case in point being Hero MotoCorp, once again one of the gainers on the Nifty 50 side, and even the move in the telecom space is what we are seeing. Add to that list the select infra counters. So yes, a lot of this sector specific action is what we are seeing in the markets. For now, the index is taking it a bit lightly, but the broader markets, a lot of these stocks and sectors are buzzing and giving big moves. But what your strategy be like? Let's try to decode that in the next 1 hour or so. We are being joined by a whole host of experts. And firstly, let us welcome Deepak Shenoy, who is joining us on the show right now. Hi Deepak, good afternoon and good to be speaking with you. And Deepak, once again an interest coming in on the IT space. The last week select counters did well. Today, of course, beat from Infosys, TCS, HCL Tech, Wipro. These are your top gainers today. What as for you is fueling the rally? Is it because of that AI bubble that a couple of these people are talking about, along with that the Indian IT companies with respect to the discretionary spending still holding up in the US? How do you see the IT sector playing?
Thanks, Shashi. I think the problem with the IT sector has been that these, the uncertainty around tariffs has, by and large, made their customers wait for a long time before they would be able to make firm plans for taking things forward. Now, I don't know whether that's changed today, but I know that I think we've come to a point where tariff definitions have become much more prevalent, at least for most countries. So they are fairly sure that that's what the tariff situation is going to be, and therefore they can make plans. And what they've delayed for about 6 months now, they can actually put into action at least for the remaining part of the year, and perhaps moving into next year as well. So hopefully that's why the IT pack is starting to move up. But I don't think this is going to be a quick move, relatively speaking, upwards, unless there's some big announcements that happen from a geopolitical perspective. Because everything that happens now from now on will be very slow, and it will just kind of make up for the lost revenue in the last 2 quarters. So it may not mean a meaningful long-term change right now. And eventually, as we see the impact of AI, see the impact of maybe some of the new initiatives of some of these companies, some of the players in the IT pack will actually do significantly better, in my opinion. Once they are once they've learned to be more lean and mean, cutting off the fat and kind of progressing towards revenues from more disparate sources using AI itself. But these are long-term things. What happened today, again, I have no idea.
Well, that uncertainty is there for sure, Deepak, in the markets. But if you talk about some other pockets, today a lot of support is coming in from indexes like realty, metal, pharma is also holding up pretty well. What's not doing all that well is the entire banking space. Now, all the managements that we've been interacting with, everybody says that the NIM pressure seems to be behind, and we have at least bottomed out on that front. What's your outlook going ahead for banks? And at this point, are you liking the PSU banks more or the larger private banks?
So, by and large, I think we won't take a view on PSU versus private right now. I think private banks in general have become more attractive because valuations have come down. But Snehi, the problem in the banking space is now one of the fact that rates have come down and there's pressure for lending rates to come down sharply from here. That pressure is going to show up in terms of competitive rates, in terms of both secured and unsecured credit NIMs contracting because short-term rates have fallen quite significantly. Long-term rates, even the GSEC is about 100 basis points above the repo rate, and corporate is even above that. So, the point is banks haven't reduced rates meaningfully in the last 2 or 3 rate cut cycle changes. And I believe that if they don't, then that competitive pressure will start building up and that will kind of bring things down. The second layer is this real money gaming ban, which probably reduces transaction velocity in a lot of banks that were maybe primary in terms of supporting some of these transactions. As UPI has shown, about 35 crore transactions were done for real money gaming alone just in the month of July, I think, or June. So it's a fairly large sector to kind of see revenue crunching when it comes to banking because they were getting a lot of float from the real money gaming players, and that much float will also go away. So maybe these are the two reasons why we're seeing some layers of weakness. But by and large, bank valuations have come down quite significantly, and I think to in some cases the private sector banks are actually more attractive than the public sector counterparts, where there seems to be a lot more froth building in. Though they've performed quite well recently, I still feel that the PSU bank valuations leave little room for improvement.
All right, so that's the take coming in on the banking space. But Deepak, we'll get back to you in a while. But before that, let's also address the credit rating from Fitch that has affirmed is long-term foreign currency issuer default rating for India at BBB negative, citing strong economic growth and resilient external finances. Let's go across to Anurag Joshi, who is here with more details on this one. Anurag.
Fitch Ratings has affirmed India's sovereign credit ratings at BBB minus with a stable outlook. Fitch, in a statement, has said that India's ratings are supported by robust growth, solid external finances, and a strengthening record on delivering growth should drive a steady improvement in the structural metrics, including notably the GDP per capita. The increase is likelihood of the debt of the country trending moderately downwards in the medium term. And the fiscal metrics are a key weakness, according to Fitch. And that also includes high deficits and debt servicing compared to BBB peers, which Fitch rates. In terms of the economic growth outlook, Fitch has kept its forecast for FY26 India economic growth at 6.5%. That's unchanged from FY25. Domestic demand will remain solid. That is underpinned from public capex and private investment. Private investment is likely to remain moderate, and particularly given the US tariff risks. Fitch has also touched on US tariffs, and it says that US tariffs are a moderate downside risk, but highly uncertain. In terms of the MPC and its rate outlooks, Fitch says that the low inflation CPI in India now, that gives space for one more 25 basis points rate cut in 2025, and falling food prices and RBI's policy actions are keeping the headline inflation constrained.
Okay, Anurag, thanks for taking us through all of those details. Now, that's the word coming in from Fitch. And to discuss this and much more, to try and understand what this means for our economy, we have Kanika Pasricha, Chief Economic Advisor at Union Bank of India, joining us. And Kanika, hi, good afternoon. Thanks so much for your time. Just very recently, we've seen an S&P upgrade coming in on India's ratings and the economic outlook. Now, while the outlook has been maintained stable by Fitch, they've maintained their rating at BBB negative. They've not changed anything or made any positive change to their stance. What is your take on this rating coming in? Of course, lots of commentary that they have backed it with, but prima facie, what's your take on this rating?
So actually, thanks. Thanks for having me here. Really grateful. So, see, 3 points to make. First and foremost, when S&P upgraded us, there was a lot of discussion that other rating agencies may also follow suit. Specifically, Fitch, which has been relatively stable in terms of its rating profile. I think the last time they upgraded us to investment grade was in August. It was in around 2006. While S&P last did the same for us was 2007, and then after 18 years, they gave us a positive surprise. So 2 more points from our side. S&P acknowledged the fiscal consolidation roadmap, macro stability turnaround, and of course the government reforms. In fact, both monetary and fiscal policy coordination. But what Fitch is sticking on to and what they're worried about is, even though they acknowledge all these things which S&P has talked about, but they have refrained from changing our rating because they're still concerned about our fiscal dynamics and in specific about the nominal GDP growth numbers. More importantly, they believe that GST reforms may have a slightly negative impact on fiscal dynamics. And after FY26, when central government intends to consolidate deficit to around 4.4% of GDP, there'll be some stalling of consolidation roadmap. See, in our view, what Fitch is saying, the points are well taken. We are in an uncertain world. There can be some sort of glitches in terms of pace of nominal GDP growth and consolidation roadmap. But the acknowledgement of the kind of turnaround we have done in our fiscal dynamics, despite being in such a challenging global environment, and macro stability turnaround seen in the last 10 to 15 years, that should have been seen in this profile, in this rating review. If not now, maybe in the coming years, maybe in the upcoming reviews, there is likely to be an acknowledgement of the same. Thanks.
Indeed, but along with that, what Fitch is highlighting, Kanika, is the fact that though the tariffs do pose a moderate downside risk to India's growth story, but they expect the US-India tariff to be negotiated lower. Do you concur with that view?
Yeah, actually, these are times when your guess is as good as mine. We hope that happens. 50% tariff hike implies that practically the US-India trade, even though Fitch is also highlighting is still muted at 2% of GDP, the overall macro impact may be limited. And in fact, if we take out pharma, electronics, which are part of Section 232, and we may, if the revisions don't happen there, still 1% of GDP, which is around $45 billion, does get affected by the 50% tariff hike. It means practically no trade in non-exempt items in terms of US-India trade. So while we would want to have faster negotiation of trade deal, but very important, also would want to compliment our government that national interests also need to be maintained. So maybe the negotiations, even if they take time, the ultimate outcome should be in our favor as well. Though yes, 50% will hurt, will pinch. At least let's hope and pray for a better deal as soon as possible.
Okay, Kanika, appreciate you taking the time out and speaking with us today, and thanks for sharing your thought on this rating.
Thanks.
Okay, so that's the word coming in from Fitch, and that's the sense that we've made. We've just had Kanika Pasricha join us and help us understand what the implication of this rating could be and why, despite an S&P upgrade, there's not been a Fitch upgrade so far, but fingers crossed. Let's move on then and once again address what's happening in the market. 24,967. Okay, so a little bit of a fall coming in from the day's high, and we're still 0.4% higher today, 96 points higher right now. So those gains are looking like we could hold on to them for the last about 45 minutes of trade left. Let's discuss that and much more. We have Vinay Rajani of HDFC Securities joining us, along with Ruchit Jain, who's joining us from Motilal Oswal Financial Services, and of course Deepak is back with us as well. Good afternoon to everybody, and Vinay, let me come to you first on the technicals. Very near term right now for the next 45 minutes or so, do you believe that we could gain some more strength? How has the intraday chart shaped up for the Nifty for you, and what are your thoughts on that?
Yeah, good afternoon. So as far as intraday is concerned, since morning breadth has been coming down now, advanced decline ratio, as we can see in the morning, advanced were much above the declines, but now it is almost similar. So breadth has come down, confidence is not there, momentum is lacking in the market, but somehow I feel that 24,850 has been the very strong support. It is derived from the 20 and 50 days exponential moving average. There has been a gap up, there was a gap between the range of 24,673 to 24,850. So there are cluster of supports which are lying in the range of 24,750 to 850. So that should hold, I think. And whatever fall which we have seen in the last week, in last two trading session, that was 300 points fall. I feel that that is a running correction in overall bullish trend. So overall market should do well only. Global markets have been performing very well. We have been underperforming till now, but I feel that this should hold 24,800, 700 range should not break. And with that stop loss, we are advising our clients to remain long in the markets, and many stocks are performing also. They are hitting 52-week highs and new all-time highs. So it is not like panic is there in the market. So broader market selectively doing good. You have to be right in stock selection, otherwise markets are good only. So as far as Nifty is concerned, 24,800 we are suggesting as a stop loss, and we are expecting this 25,160, whatever the high was there in recent days, that will be taken out soon. So overall bias is on the bullish side.
Continue to hold that bullish thought when it comes to Nifty 50. But Ruchit, let me come to you to have your take on the star performer for today sectorally, and that is the IT pack. We have seen very good moves, and it's not just the large cap IT names, the mid and small end of the market is also seen to be participating. Though Deepak just shared his thought fundamentally, but how is the technical setup looking like, and any stocks within the pack that looked attractive? Good afternoon.
Yeah, hi, very good afternoon to everyone. No, IT space, we have seen a significant underperformance compared to the broader markets in last few months. And post the recent correction where the index had corrected from this high of 39,500 to 34,000 without any meaningful pullback, the momentum readings were oversold, and hence we are witnessing a pullback move because of this oversold setups. So it's very early to say that the stocks have bottomed out and have started a fresh uptrend. But what we believe that post such correction and oversold setups, the trend usually initially changes from down to sideways. So we believe that this would slip into some consolidation phase for the IT names, and because we were at the lower end of the range, and hence we are witnessing this pullback move, which could get extended towards 37,000, 37,500 kind of range. Now, within the IT space, if you look at the stock specific moves, then Emphasis is one stock which clearly stands out compared to other names within the sector, when the entire sector has seen a sharp correction, and even the large cap names and most of the mid cap names have traded at low levels. Emphasis did not break even its 200-day moving average when the entire sector was going down, and relatively the correction was much lower at those levels. So I think when the sector was not doing good, this was one stock where the prices were not correcting, stock was holding above its support zone, And when there is a pullback move in the sector, we believe that Emphasis should see an outperformance compared to other stocks within the sector. So if one has to pick any stock, then Emphasis can be bought even at current levels with stop loss below 2800 kind of level. For a short-term trade, one can expect levels around 3100 to 3150.
Okay, so that's the take on TCS, some of the IT counters in focus as well. But before we move on, just want to address the flash on the bottom of the screen on the ticker. That's an 80 now exclusive coming for you. Big relief is expected for the agriculture and allied sectors under GST. Significant GST reduction is also likely on farming machinery, and GST on tractors may be reduced to 5% from the existing 12%. We'll get in our reporter Prakash very soon to share more details on this. But in the meanwhile, let's refocus and talk about a sector that's up in a buzz today. And along with IT, it's the entire sub-pocket of paper stocks that are on a tear in today's trading session as the government has imposed minimum import price on paper boards. Let's go across to Sharath to get us all the key triggers that have aided all of these paper stocks today. Sharath.
Well, the paper stocks are on a tear, be it JK Paper, Andhra Paper, TNPL, and even West Coast Paper, all the stocks buzzing in trade. The most important news flow coming in for this sector during the weekend is that government has imposed the minimum import prices on virgin multi-layer paper board. Now, this amendment has happened for the import policy under Chapter 48. Now, interestingly, the raw material prices are stable for the paper and the packaging industry, and the larger packaging demand is expected to kick in for the festive season as well. And generally, this happens in the second quarter. And initially, for the festive season, as per channel checks, suggested that there's a big demand coming for the packaging segment. Also, there are certain segments where the capacity expansions are also taking place. And do remember, seasonally, the third quarter and the fourth quarter is stronger when it comes to the paper industry and packaging, to be precise. Interestingly, the education and the NCERT syllabus change is also happening, where it will drive more demand for the books, and that's why the second order effect would be coming on the papers as well. So net, strong positive triggers coming for the paper stocks, but these stocks have been on a tear in the day's trade.
All right, thank you so much, Sharath, for getting us all those details. Yes, of course, the paper stocks are on tear. A lot of these stocks, which are indeed quite volatile in nature as well. See, look at the move today. It's been a 15 to 18% jump all across the board coming in for the paper counters. But on the bottom of your screen, our reporter Prakash has got you a very interesting update, and specifically with respect to the dairy machinery GST, which has been brought to like 5% right now, and along with that, the GST on the machinery parts, such as those related to the farm and the equipment sector, from 12% that will be slashed to 5%. Deepak, wanted to have your take on this one, because possibly this particular news flow could bode very well for companies like Escorts as well as M&M, because they are the leaders in the tractor space. Deepak, we have been talking, and this news is obviously in the markets, that how this can really bode well for the auto sector. It's not just the two-wheelers, four-wheelers could be beneficiary, but a substantial cut from 12% to 5%. Isn't that a big one for the farmers and the rural economy as a whole?
So it's actually quite complicated, Yashashri, because what happens is your GST that you are able to charge your customers, you have to use that to offset whatever GST you pay on your inputs. If your inputs are at 18% on services and 12% on some other things, but your output is going to be realizable only at 5%, then you may not get the complete offset. And then what will happen is the list price of the car or the tractor or the whatever may actually increase. So to give you an idea, something that's, let's say, 10 lakh rupees, you put a 5% GST on it, it costs 10 lakh 50,000. And that 50,000 is the GST you're supposed to collect. Now, let us say it cost you, I don't know, maybe 8 lakhs to make the car. But on 8 lakhs, you paid a blended GST rate of maybe 15% services and other stuff. So 15% on 8 lakhs is about roughly about 1,20,000 rupees. Now you're collecting 50,000 rupees GST, but your inputs GST is 1,20,000 rupees. There's a 70,000 rupee gap that wasn't there earlier. And therefore, what typically they will do is increase the list price from 10 lakhs to maybe 10 lakh 50,000 or 10 lakh 70,000, just to correct the fact that you're not able to make up that GST differential anymore. And that is why this may not be useful unless this 5% GST also applies to the inputs used in making tractors, whether it is steel or engines or sensors or whatever else that is there. If those inputs cost more than 5%, then this may not result in a major saving for people who are buying tractors. So they'll have to kind of figure out a comprehensive approach to the GST thing, other than just saying, oh, tractors only will cost 5%, but everything else will be 12 and 18%. Then it doesn't make so much of a difference.
Okay, Deepak, appreciate these thoughts and appreciate you taking the time out and speaking to us today. Thanks so much for your time. Well, we'll keep the conversation about the markets going ahead on the other side of this very short break. So we'll slip into a break and be right back.
Welcome back to Closing Trades, and let's put the spotlight on the big news that we are gathering, wherein sources tell ET now that big relief is likely for agriculture and allied sectors under GST. The government is planning significant GST reductions that could be likely on farming machinery. Let's go across to Prakash for more details on this one. Prakash, firstly, help us understand what you are gathering.
Yeah, the big relief likely for agriculture and allied sectors under GST. We are learning that a significant GST reduction is expected on farming machinery. In fact, GST on tractors may be reduced to 5% from existing 12%, whereas GST on machinery parts such as seeders, transplanters, and cultivators for that matter may be placed under 5% slab. When it comes to dairy sector, GST on dairy machinery may be brought under 5%. Moving on to fisheries, where majority of items already placed under 5% slab, but the sources are indicating that the items such as fish and seafood in prepared or preserved form likely to attract 5% GST, which is currently at currently under 12% slab. Sources tell us that mega reforms under GST likely to be approved in the next GST Council's meeting, which is scheduled for September 3 and 4, where government is committed to implementing, massive rate reduction under GST before the festive season. As you are aware that the GST, GOM and rate rationalization has already accepted the centre's proposal for a two-rate GST structure, essentially 5% and 18%. In fact, GOM has also given its nod for the abolition of the 12% and 28% GST slab. So process has been initiated. We are expecting mega rate reduction in the GST in the next GST Council meeting. Back to you.
All right, Prakash, thanks for all of those details. Just want to get a clearer understanding on this. So this is about the reduction in the farm equipment and majorly tractors. But any other, is this only for tractors? Does it cover an entire ambit of farm equipment? And along with that, dairy farming also we understand is under this umbrella.
Yeah, of course, it's all about agriculture and allied sectors that include dairy, fisheries, where majority of items already under 5%, but some of the items are under 12% slab, and under mega rate rationalization, it is expected that the GST Council may approve these items to be brought under 12%, 5% slab from a 12% slab. So it's a very significant development coming in, and as committed and announced by the Prime Minister from the Red Fort, that the mega reduction could be provided to the consumer in terms of GST rate reduction before festival season. And therefore, the process has been initiated. GOM rate rationalization has already approved the centre's proposal to have two rate structure, essentially 5% and 18%. So majority of items under 12% slab will be placed under 5%, and these products such as agriculture, fisheries, dairy and farming equipments are largely comes under 12% and 5%. So those items which are there in 12% slab at this point of time will be brought under 5%. So it's a very significant development coming in.
All right. Thank you so much, Prakash, for getting us all those details. Really appreciate that. And yes, indeed, a very big news flow coming in, wherein the GST on tractors and the allied sectors, that is expected to be slashed from those 12% mark to 5% now. Well, of course, that was in works. But yes, 3rd and 4th September is when the next GST Council meet is there and rate rationalization will take place. So definitely all eyes on that as well. But with this, let's move on and let's also talk about and back to the markets then, because what we are getting to see is indeed that all these companies are also reacting to this particular news flow. We also have Siraj Hussain, former Union Agriculture Secretary, visiting senior fellow of ICRIER, joining us on the show right now. Very good afternoon, Mr. Hussain, and thank you so much for your time. This relief coming in for the tractor industry from 12% to 5%, that is likely. How do you see this impacting the overall sector, and was it like really a long ask by the industry?
Actually, the agriculture sector, the farmers' organizations have been demanding for a long time that the GST on agriculture machinery, equipment, etc., should be in the lowest possible slab. And the reason is that for agricultural produce, the farmers do not get any ITC. Therefore, the farmers were not benefiting from this entire regime. Now, I do not think that agriculture machinery, whether it is tractors or anything else, will be totally exempt. But I think their classification in the 5% slab is a good move.
Mr. Hussain, good move indeed, and this is likely to happen. So all eyes are going to be on that September 3 and 4 GST meeting that we have to get a clearer picture on this. But Mr. Hussain, dairy and fisheries machinery are also included in this particular news flow. They too might come under that 5% slab from the 12% earlier. Help us understand how this aids allied sectors of agriculture like fisheries, like aquaculture. What's your sense on that?
Actually, dairy sector is quite capital intensive, and therefore reduction in the GST rate from 12% to 5% will be a boost to the milk processing sector, because even now just about 20% of milk is processed in the organized sector. Rest of the milk is still sold in the unorganized sector, and therefore there is a good scope for more processing of milk in the organized sector, which will improve the income of the farmers and also improve the quality of milk which is sold in the market. Similarly, for fisheries, there is a lot of capital investment needed in the fishery sector, in cold chain, etc. So reduction in the GST rate will help improve India's competitiveness in the export of fisheries products, because our exports to US are suffering about $3 billion. So that is also a very good move.
All right, but along with that, Mr. Hussain, back to the kind of GST cuts that are likely segment-wise, we believe that the GST on machinery parts such as plows, seeder, transplanters as well as cultivators, that too may be placed within that 5% bracket. Along with that, do you believe that any other pocket which is still left where the government can really look to cut and reduce the GST?
Actually, my personal view is that almost every commodity should be under the GST regime, because that formalizes the sector, it improves the supply chain, it provides an opportunity to industry at various levels to claim input tax credit. So 0% is not a good idea. 5% is very good. And over a period of time, we should move to the lowest possible slab. So that is a good thing. Now, beyond this, I think the agricultural commodities sold in the loose form will continue to be exempted from GST, and any commodity which is sold in packaged form, I think will also continue to be in 5% slab of GST.
Okay, Mr. Hussain, appreciate the thoughts, and also thanks so much for taking the time and speaking to us today.
Okay, thanks.
Thanks so much. Okay, on that note, let's move away from this GST conversation. Like I mentioned earlier, 3rd and 4th September is the meeting, so we'll get more clarity on this front on that day. But sentimentally positive coming in for the agriculture and agriculture allied sectors. But on that note, let's welcome Ashi Anand, founder and CEO at IME Capital on the fundamentals. And Ashi, before we come to you, good afternoon first of all, but before we come to you, let's just get a little technical and get some of our BTST ideas from our technical experts joining us on the show today. So let's get right to it. And Ruchit, coming to you first, what's some of the BTSC trades that you are executing, or which are the stocks that are looking good at the moment?
Yeah, the Exide is one stock which is looking quite positive on the charts. Last 2 days ago itself, we have seen a breakout from a descending and triangle pattern. In technical analysis, this is a bullish sign, and we expect a good follow-up move happening in Exide. So Exide can be bought as it is, auto ancillary as a theme. We believe that would remain in focus for some positive moves in the short term. So Exide can be bought at current levels with stop loss below 390 for potential targets around 418. And Zydus Life Science has given a breakout from its consolidation today. So last 6 months, the stock was trading within a broad range, and today you can see that the move has been supported by very good volumes compared to its daily average. So we expect a good follow-up move in Zydus Life Science as well. Keeping stop loss below 1,000 at 990, one can create fresh longs for potential targets of 1,070.
All right, so those are the two calls coming in from Ruchit. But Vinay, what about you? Which are the stocks that you are tracking?
Yeah, so I would recommend two mid-cap stocks. First is the Kirloskar Oil Engine. The stock has given nice breakout on the medium-term charts and has been outperforming. So it looks like that it is a fresh breakout on the chart. So Kirloskar Oil Engine around 975, 977. One can go long. I would recommend stop loss at 960 for the trading. On the upside, I'm expecting a positional target at 1045. The second pick I would choose is the Stokecraft. So Stokecraft has also given a fresh breakout on the charts, and recently it has gone, price have gone up with the jump in volumes. So quite convincing setup on the chart. So Stokecraft can be bought around 678. Stop loss I would recommend it at 665. On the upside, I'm expecting a short-term target at 714.
Okay, so those are some of the stocks that are looking good to our technical experts. But Ashi, once again, let's come to you and get in your sense of the market today. And just a short while ago, we had my colleague Prakash Priyadashi who had joined us on the show, and he was saying that there is a good chance that farm equipment could come under that 5% GST ambit from 12% earlier. Give us a sense of how this could pan out for the rural economy, because even all of these major FMCG staple managements, one commentary is constant across the board is that rural demand is doing very good while urban is just recovering. Do you think this could be a very big incremental positive coming in for the rural economy, and maybe the gap between the rural and urban demand could widen from here?
Yeah, so firstly, thank you for having me on the show. And with regards the GST rationalization, especially with relation to the agri sector, I think the agri sector has been underperforming for a considerable amount of time. It has a lot of potential, but has been underperforming relative to its potential for I think many decades now. What you have seen is even post kind of COVID, the initial rural recovery was a lot weaker, and it's only over the last year that you've seen kind of the rural starting to come back. Now, what you are kind of seeing from the government, and there are multiple measures, all which kind of add on to each other, but you are kind of seeing a clear shift away from the government's earlier very strong focus on capex towards they are trying to kind of very clearly revive consumption. And within that, kind of the whole rural and the agri economy is quite important. Now, I think there is immense sense for various farm equipment to be on the lowest GST slab. That will clearly act as kind of an impetus for demand. And I think from a longer term perspective, if you're just looking at the state of India's agri economy versus other kind of emerging or developed economies, there is a tremendous amount of scope for productivity enhancement in terms of our agri yields. And you are going to need industrialization, mechanization, all of this in order to actually be able to capture that potential. Now, from that perspective, I think one, there is a large amount of untapped, unmet demand, which has been pent up over many years. You are starting to see kind of signs of the rural recovery, or you are starting to see signs of a rural recovery turnaround. And this kind of move would clearly help that. So I think after a fairly long dominant position, you are going to see some amount of excitement come back around agri and rural names.
Okay, so sounding good for that space. Let's shift focus from that. And pardon me, sorry. We have our technical expert. We have Ruchit still on board with us. Ruchit, give us a chart check on some of these stocks that are not doing well today at all. Case in point being Imami Limited. A 4% cut is what we're seeing on the stock. And this is also largely rural facing stock, but on the consumption side. And we've seen a block deal or multiple block deals rather happen in this stock today. So Imami Limited is down 4%. What's the chart check looking like? And are you seeing any strength on this stock?
Well, it's not in today's trading session only, but if you look at the recent past, also the stock has been one of the underperformer, where a broad consolidation has been seen since its last 5 to 6 months. Whenever the stock comes near the 650, 640 mark, we see selling pressure over there, and the stock is not able to surpass that. So I think until we see a breakout above 650, this underperformance could continue, and rather the stock could continue its consolidation phase.
Okay, so that's the take coming in. Ashi, let's talk about some sectors that are in focus today. While of course IT is on a tear, it's up and away in today's trading session. What's also doing well is realty, metal and pharma. Particularly, let's talk about Nifty Pharma, because even though we have this 27th August deadline of that additional 25% tariff hitting us, we still don't have a very clear picture on when the pharma tariff is going to come into play. Would you say the pharma sector is slightly sheltered compared to the others right now? And B, on the second note, some stocks if you could recommend from this sector, if you don't want to get stock specific, some themes that you like, because just today we've had a note on CDMO. Select stocks are also doing well on the generic side. So what's your take on pharma?
No, sure. So I think pharma, the tariff or no tariff, right? That is a really, really interesting question. It makes immense sense for pharma to be excluded from kind of tariffs. US drug prices are already the highest in the world and by a big margin. Affordability of pharma and drugs in the US is a big problem for a large parts of the society. And kind of increasing tariffs and making what is already extremely expensive even more expensive is really not going to solve for anything. So I think one, there is immense sense for pharma to be excluded from tariffs. But if it is very, very difficult to predict what goes on in Trump's mind and what actions he'd actually take, if there were kind of tariffs to be implemented against India, that would clearly be negative. It would raise a lot of questions. It is not that easy to kind of move pharma capacities from one part of the world to the other. There are very large, long lead times to actually set up a plant, to get the approvals, etc. So I think it's fair to go with a reasonable base case saying that large aggressive pharma tariffs, especially the kind of numbers being thrown up in the media, etc. I think one can assume that there's a fairly low chance of that happening. If it does kind of come into play, that would clearly be disruptive for the sector, and I think it will also be quite disruptive for pharma availability of medicines in the US. Now, in terms of themes, I think it is important to, if you look in pharma, to be quite picky about both the specific themes and the kind of stocks that you are looking at. I think there is one important base effect of Revlimid, which will kind of make growth for a lot of pharma companies supplying just to the US quite difficult. So I think firstly, when you are looking at pharma, it is very important to kind of understand at a company level, do those companies have an interesting kind of pipeline of launches that can actually make up for the kind of negative deflationary impact Revlimid is going to have on pharma companies over the coming years. So this is really the kind of US generic plays, and I think within that, companies with greater presence in biosimilars, in inhalations, in some of these more complex therapies, those actually become interesting. CRAMS is clearly a very interesting opportunity. Within CRAMS is kind of within CRAMS and also in branded generics, you are going to have a very large opportunity come out over the next 1 to 2 years in terms of GLP therapies actually going off patent, and both the branded generic markets in both India and kind of other emerging markets actually opening up. This is a very, very large opportunity, and being able to understand who the winners are going to be in this opportunity uh, is actually quite an interesting area within the overall pharma space. So I think specifically kind of CDMOs and branded generic players that can really leverage the whole GLP opportunity are also quite interesting. So this is kind of the space that we are, these are kind of spaces we're looking at within the pharma universe.
Okay, so that's some of the themes, and that's a take on pharma coming in from Ashi. Ruchit, what about your take on some of these pharma stocks and how are they shaping up on the charts? Today, you have GSK Pharma that's in focus. They forayed into the oncology segment, launched 2 drugs in the same as well. Which stocks are looking good to you from the pharma pack?
Yeah, so I think pharma already has been one of the sector which has not largely performed along with the market up move in last few months, mainly because of a lot of concerns regarding what could be the tariffs hike on these pharma names from the US. But the risk reward ratio post this recent underperformance has turned favorable in many of the stocks, particularly in frontline stocks such as Zydus Life Sciences there, or even recently we witnessed a good run up move in Glenmark Pharma where some correction has recently taken place. So we believe that stocks such as Zydus Life is there, Glenmark Pharma is there. This would show some move going ahead. So the risk reward ratio completely is favorable for creating fresh longs. Since these have not rallied much since last few months. So we prefer stocks such as Zydus Life as well as Glenmark from the entire pharma basket.
Yes, those are some of the stocks that Ruchit is liking. Ashi, I understand this is very short term in nature, but if one has to relook at their portfolio before this 27 August deadline for the tariffs, given that it's a trading holiday for us on account of Ganesh Chaturthi, in essence, our viewers only have time right now for the last 10 minutes or so and tomorrow. How should one, if at all, be approaching this tariff situation and making any changes, if at all, to the portfolio? Or would you right now recommend a rather wait and watch approach?
So yeah, it is going to be, it's obviously very difficult. One is a very short term. Secondly, it is a bit of a 0-1, right? Either you're going to have one of two or three outcomes. The first outcome is that this additional 25% tariff gets kind of lifted and really is not implemented. That would be seen as a kind of positive for the markets. You're likely to see a bit of a recovery, a bit of a rally off that. The second alternative is that there is kind of the additional tariff does stay without any clarity on when it's going to be removed. That would be kind of seen as a negative and you'd see a downward move. And the third kind of alternative is, as Trump has done very often, you just go and delay the implementation, give another 30 to 60 days. I think importantly, while there is clearly the potential for an up move or a down move, at least at this point in time, we don't see this as being very considerable. Markets seem to have taken an overall view with relation to tariffs that there are certain sectors which are getting very badly and directly impacted. But because those sectors don't really comprise a very significant part of either the overall economy or also of overall market composition, more important from a market perspective, you are likely to see some moves, but at an overall market level, I think these moves may not be very pronounced. Yes, it will be an up or down day on Thursday, depending on what happens with the tariffs. But you may not see a big follow on of that buying or selling based on what happens. But clearly, from a positioning perspective, for anyone with exposure specifically to companies with US exports, those are companies that are going to see a very high degree of volatility. As kind of long-term investors, we prefer not taking calls that are not dependent on external factors. And kind of because there is a high sensitivity to what happens on Wednesday, we would actually not recommend carrying a lot of these weights going into the holiday.
The take on what the approach to this entire tariff deadline could be and should be rather. And before we wind down, Ruchit, give us a sense of where do you see the levels for tomorrow on the Nifty? Do you believe the fear that investors have about this 27th August deadline could start being a little more prominent tomorrow, and we might not see the gains that we've seen on the Nifty today? Maybe some position squaring off. Is that something that you're forecasting for tomorrow?
So I think we would see another day of consolidation in the markets ahead of this US tariff deadline, and even we have a midweek market holiday on Wednesday. And if we look at the today's activity as well, we have seen a positive opening itself of about 80-100 point, but post opening we have not seen any kind of follow-up trending moves happening. So I think just because until this clarity comes and during this midweek holiday, I think we would see some amount of consolidation in the indices yesterday with 24 in the indices tomorrow with 24,800 would act as a support on the lower side, whereas 25,000, 25,050 would continue to act as a resistance.
What about Nifty Bank? That one has been absolutely lackluster today. Any levels that you're spotting over there?
Then there has been a relative underperformance in last 3-4 trading sessions where the markets have seen a pullback move, but that has not been supported by the banking space. Rather, in this entire pullback move, if you look at the sectoral indices, then it was the IT where the heavyweights have supported to lift the benchmark index higher. But banking space, I think still until we surpass that 55,800, 56,000 mark, the overall short-term momentum is not looking that positive. So on the low side, 54,800 would be the support, but no, definitely we are not witnessing any kind of strength coming in the banking for last few sessions.
In fact, on the Nifty Bank, we've slipped very marginally into the red. So that's the take on the market right now. Ashi and Rishit, thank you so much for joining us with your thoughts and appreciate your time today. Well, on that note, let's start winding down for the day. Only a couple of minutes of trade left, and I'm going to hand it over to my colleague Ashesha, who's here to take us through what the day has been on the street like today. Ashesha.
Well, yes, Nehi, we did give up some of those gains in the second half of trade, but despite that, Nifty is ending with gains of nearly 100 points as we speak, near that 24,980 mark. And as you were mentioning, Nifty Bank has slipped into the red in the last half an hour or so. Nifty Bank, that one is ending the day with a marginal cut of about 10 odd points, near that 55,140 mark. Broader market indices should also come up for you on your screens. Nifty Small and Mid Cap Index. Nifty Mid Cap Index absolutely flat for the day. And Nifty Small Cap Index should also come up for you on your screens. That one is ending with a marginal cut in today's trading session. In terms of individual stocks, we had a whole host of IT stocks which were buzzing in trade. Infosys, this one was up 3%, the biggest gainer on the Nifty IT Index and on the Nifty 50 Index. Nifty IT Index up and away. Infosys gaining in excess of 3%. TCS up 3%. We had the likes of HCL Tech and other IT companies which were bucking the trend in trade today. Wipro ending the day 2.5% higher. HCL Tech at 1505. In terms of losers, we had Apollo Hospitals. That one is ending the day with a downtick of nearly 1% in trade today. We have Adani Enterprises and Nestle. All of these amongst the top losers from the Nifty 50 pack. In terms of individual sectors, we of course had IT, but apart from IT, real estate stocks were also firing in trade today. We had Sobha, that one is ending the day with an uptick of nearly 2%. Nifty Real Estate Index up 0.7% as we speak. Sobha up 1.8%. DLF and Raymond were also gaining in excess of 1% in trade today. So real estate stocks clearly were shining bright in trade. In terms of individual stocks, let's put the spotlight on the defense sector and Masgao Dock in particular, where India has cleared Indo-German submarine deal to the tune of 75,000 crore. Masgao Dock ending the day with an uptick of 2%. ITC Hotels, where JM Financial initiated coverage with a sell rating. We saw some bit of downward pressure come in on this counter. ITC Hotel ending the day with a downtick of nearly 0.6%. Meanwhile, Yes Bank, where SMBC has received RBI nod to buy additional 25% stake in Yes Bank. This stock was up 1.5%. We had Bajaj Auto, where they have made some commentary with respect to overcoming global magnet supply challenge, and Chetak has been delivered ahead of plan. So some deliveries being done over here. Bajaj Auto up 0.9%. Meanwhile, Godrej Properties, where they had launched their project in Hyderabad, and now the sales worth 1,000 crore has already been recorded. So on the index level, Nifty is ending the day with gains of nearly 110 odd points as we speak. Although on the Bank Nifty level, we saw tepid move with a marginal downtick in trade today. But that's all the time we have on this edition of the show. But don't go anywhere. More news and updates will continue on the other side.